Welcome to the Deep Dive. Today, we're really going to unpack the recent financial story of Aditya Birla Capital.
Yeah, we've got quite a bit to go through. The results presentation, the earnings call transcript, standalone financials.
And some other announcements, too. It's a good amount of material.
Definitely. And our goal really is to cut through all those numbers and figure out what's actually driving their performance.
Right. We want to see where the growth is coming from, what their main strategies are.
Exactly. To give you a clear, insightful picture of where this, financial services giant stands and, where it might be heading.
Okay, let's jump right in then. The top-line numbers for the full financial year 2025. It looks like they had a pretty strong run.
Oh, absolutely. The growth across several key areas is, quite significant. Take their total lending portfolio hit 1,057,404 crore.
Wow, that's a big number. How does that compare?
That's up 27% compared to last year, and even 8% growth just from the previous quarter.
Okay, solid momentum there. What about assets under management?
Total AUM, that's up to 5,011,260 crore. So a 17% rise year on year.
And didn't their life insurance AUM cross a major threshold?
It did, yeah. It crossed the euro 1 lakh crore mark. That's a really big milestone for them. This kind of growth, it's not just bigger numbers. It says something about their market strategy and how they're executing it.
100,000 crore in life insurance AUM. That is huge. Okay, what about the actual earnings side? Profitability.
Right. So on earnings, gross premium reached 25,579 crore. That's a 22% jump year on year.
Okay. And revenue?
Revenue came in at 47,369 crore, which is a solid 20% increase. Profit after tax was 3,142 crore.
Which is about 8% growth, right?
Exactly, 8% growth year on year. So these figures, they suggest a pretty healthy expansion, and improving profitability.
So it's not just one specific area firing on all cylinders. It sounds like this growth is pretty broad-based.
Precisely. The information points to robust growth momentum across their main businesses. We're seeing positive trends in NBFC lending, housing finance, life insurance, asset management, stockbroking, and health insurance.
That covers a lot of ground.
It does. And even if you look at their consolidated segment revenue, excluding asset management, wellness, and health insurance for the Ind AS reporting, that's the Indian accounting standards.
Right, the specific reporting rules.
Yeah. Even with that view, the growth story holds strong. And if you drill down even more, their standalone NBFC segment, that reported a healthy operating profit of 944 crore.
Okay.
Plus a 20% increase in average assets under management and a 16% rise in premium income. So it really suggests a solid underlying performance in their core lending operations.
Okay, good overview. Let's maybe zoom in now on the NBFC lending side specifically. What are the key things jumping out at you there?
Sure. So in their NBFC lending arm, the volume of new loans, the disbursements in Q4 FY25 grew by 8% year on year. That reached 19,523 crore.
Okay. And the total assets they're managing in that segment?
That saw a significant 20% year-on-year increase, totaling 1,026,351 crore.
And what's interesting is who they're lending to, right?
Exactly. Their strategic focus seems to be prioritizing retail, SME, small and medium enterprises, and H&I, high net worth individuals. These segments now make up, 71% of their total loan portfolio.
71%, that's a big chunk.
It is. And they're also emphasizing secured lending. That accounts for 74% of their loan book now.
That makes sense. Moving towards secured loans, that often helps mitigate risk, especially when the economy feels a bit dynamic.
Precisely. It's a common strategy in these conditions.
And within their business loans, what's specifically driving that growth?
The main driver there seems to be their focus on the SME segment. They've built out a pretty diverse range of products for that market.
Like what sort of products?
Things like unsecured and secured business loans, supply chain financing. It suggests they're really targeting the needs of smaller businesses, which, can be a huge growth area.
Right. And they still have personal loans, consumer loans, corporate lending too.
Oh, yes. Personal, consumer, even larger corporate and mid-market loans. It shows a pretty broad approach overall.
It's also pretty striking just how much of their NBFC operation is digital now.
Absolutely. Digital adoption is a huge theme here. They're reporting 91% of new customers are onboarded digitally.
91%.
Yeah. And 98% of EMI collections are digital, plus 94% of customer service interactions.
That level of digital engagement must really help with efficiency and Probably the customer experience, too.
You'd think so, yes. Likely leads to greater efficiency and hopefully a more convenient experience.
Now, with lending, risk is always the big question. How are they managing that, especially given some of the wider market concerns about unsecured lending lately?
Right. They're highlighting a strong focus on, well, prudent risk management. Impressively, over 94% of their personal and consumer loans went to people with a credit score of 700 or higher.
Okay, so focusing on borrowers with good credit history.
Exactly. And their gross stage 3, or GS3, that's the measure for the most severe loan delinquencies, it stood at a relatively comfortable 2.24% as of March 2025.
And what about the cost of credit? Did that go up?
Actually, no, that's what's noteworthy. They managed to reduce their credit costs from 1.5% down to 1.31%.
Even with those industry concerns, how do they manage that?
Well, it suggests their strategic shift towards more secured business, plus strengthening their underwriting processes. It seems to be paying off. It's having a positive impact.
Okay, interesting. Let's move over to their housing finance business, the HFC. The report mentioned good traction in construction finance and something about principal business criteria. What should we take away from that?
Yes, the construction finance part seems to be doing well, which could be a growth spot within their housing finance arm.
And the principal business criteria, what's that about?
That refers to a regulatory guideline. Basically, HFCs need to have at least 60% of their assets tied up in actual housing finance.
Got it. So they need to balance that rule.
Right. It seems they're navigating that requirement while also seeing opportunities in related areas like construction finance and maybe affordable housing.
So the mix within their housing finance business might change over time.
It could, yeah, as they balance those regulations with where they see market opportunities.
Okay. Now, switching gears again, life insurance. The growth numbers here looked, well, particularly impressive.
They really did. The life insurance business had a standout year. Their individual first-year premium, that's new individual policies, grew by a huge 34% year-on-year, reaching 4,115 crore.
34%. And group premiums.
Group new business premium also saw strong growth, up 23% to 5,586 crore.
And that's translating into market share gains.
It is. Their market share in individual first-year premiums increased by 68 basis points. It's now at 4.84%. That shows they're definitely gaining ground in a competitive space.
And in insurance, keeping customers long-term, persistency is crucial. How are they doing on that front?
Very well, actually. Their 13th month persistency rate is at 88%. That's considered top tier.
So 88% of policies are still active after 13 months.
Exactly. It's a strong sign of customer satisfaction and, the quality of their products.
What about the value of that new business, the VNB?
That grew too. VNB was up 17% year-on-year to 818 crore, with a pretty healthy net VNB margin of 18.0%.
Embedded value. That's the overall value measure, right?
Right, the present value of future profits from the current business. That also grew substantially, up 20% year-on-year, reaching 13,812 crore by March end.
And we already mentioned the AUM crossing 1 lakh crore. It sounds like a very focused approach in life insurance.
It does seem that way. Their product strategy looks well defined. They're focusing on their own sales channels and partnerships, offering a mix of protection plans and ULIPs.
ULIPs being the unit-linked insurance plan.
Correct. And aiming to deliver value with things like their salaried Suraksha plan.
And digital adoption seems just as strong here.
Even more so, maybe? Remarkably, 100% of their new life insurance business processes are digital now.
100%. Wow.
Yeah. 81% of renewals online, 94% customer self-service digitally, and 37% of business coming from pre-approved sum assured offers. This digital-first approach has to be contributing to their efficiency and reach.
Okay, let's touch on health insurance, another dynamic area. How's Aditya Birla Capital doing there?
Also showing strong momentum. Their gross written premium, the total premium collected before reinsurance and stuff, grew by a robust 33% year-on-year to 4,940 crore.
Nice growth. Market share.
They increased their market share among the standalone health insurers, the SAHIs, by 137 basis points. They're now at 12.6%.
Profitability in health insurance can be tricky. What about their combined ratio?
It improved down to 105% from 110%. Lower is generally better here, so it suggests they're getting more efficient at managing claims and operating costs in health.
The presentation mentioned a health-first model. What's the core idea behind that strategy?
Well, it seems centered around proactively promoting wellness. So incentivizing healthy habits, offering programs for chronic condition management.
So not just ensuring sickness, but promoting health.
Kind of, yeah. Plus, tailoring products for specific segments and expanding their market presence. They also mention high customer engagement, partly thanks to their Active Health app.
So that holistic health approach seems to be working for them.
It appears to be resonating with customers, yes.
Okay. And asset management, how does that fit into the overall AUM picture we discussed earlier?
Right, so that total AUM figure of over euro 5 lakh crore includes asset management. The report also gave a specific metric for their NBFC business.
Tell us.
The monthly flows into systematic investment plans, SIPs. Those grew 5% year-on-year, reaching over 1,316 crore in March 2025.
Okay, so steady growth in retail investments via SIPs.
Yeah, SIPs are super popular for retail investors, so that positive trend is a good sign for their retail investment business.
Aditya Birla Capital also seems to be pushing ahead with several other big strategic initiatives beyond the core lending and insurance. Can you give us some highlights there?
Absolutely. There's a really strong emphasis on building out digital platforms and ecosystems. Take their ABCD platform, that's their omni-channel direct-to-consumer platform.
Right, ABCD. How's that doing?
It's reached 5.5 million customers, offers over 25 product categories, and they've created 2.3 million virtual payment addresses, VPAs.
Any recent updates there?
Yeah, in the last quarter, they launched features like Vehicle Track, DigiSilver, and CSIP features right within their investment products.
And didn't they get a new license recently?
They did, a big one, a prepaid payment instrument, or PPI license from the RBI. That will likely let them enhance their digital payment offerings even further.
Interesting. And what about initiatives for specific segments, like MSMEs?
Yes, their UDYOG Plus platform that's specifically designed for the needs of micro, small, and medium enterprises.
How's that platform performing?
Pretty significant traction, around 2.3 million registrations and over 3,500 crore in assets under management. The idea is to give MSMEs a streamlined digital way to get business loans and other services.
Okay. And they have something for distributors, too.
Right. ABC Stellar, that's a B2D business-to-distributor platform, focuses on improving the experience for their distribution partners, trying to increase engagement and boost their productivity.
It really does sound like a comprehensive push towards digital integration across the entire business.
That's definitely a key takeaway. Their whole digital reinvention strategy seems focused on accelerating growth, both in prime and affordable segments.
How are they doing that?
By leveraging the wider Aditya Birla Group ecosystem, creating seamless digital journeys for onboarding and servicing, and developing both assisted and, DIY customer options.
And data science plays a role.
A big one, it seems. They mention using GenAI for insights, building a robust data platform, and applying analytics all across the customer lifecycle to, better understand and serve people.
Okay, let's shift focus slightly to funding and capital. With all this growth, how well capitalized are they? Are they positioned to support it?
Their capital adequacy ratio, the CIR, looks quite comfortable. It's at 16.54%.
And the regulatory minimum is 15%.
Exactly, so they're well above that. Their Tier 1 capital is also strong at 14.3%. They've basically stated they're comfortable capital-wise to support growth, including in the housing finance business.
Have they raised funds recently?
They got approval to raise more funds by issuing debt securities, NCDs. That increases their total borrowing limit to 1,065,000 crore.
And what are those funds for?
Usual stuff, really. Financing activities, repaying existing loans, business operations, CapEx, working capital. And importantly, they reported no deviation in how they've used the proceeds from past issues.
What about their funding mix? Where does the money come from?
It looks reasonably diversified. Almost half of their borrowings come from banks. So yeah, that comfortable capital position is pretty crucial for keeping this growth trajectory going.
Now, a really significant development we need to cover is the amalgamation. Aditya Birla Finance Ltd. Merging with Aditya Birla Capital. What does the structure look like now?
Right. That merger officially took effect April 1st, 2025, but the appointed date was backdated to April 1st, 2024.
Okay, so what's the impact?
The company now essentially operates with two main business segments, the NBFC lending part and an investment business part.
And the investment business holds.
It basically holds their investments in their subsidiaries, joint ventures, and associates. And because of this merger, they've had to restate their standalone and consolidated financials to reflect the new structure.
And what about their licenses?
They surrendered their old NBFC licenses, the NBFC ICC and NBFC CIC ones, and have applied for a fresh NBFC ICC registration for the combined Aditya Birla Capital entity.
And in the meantime,
the RBI has given them permission to operate as an NBFC ICC while that new registration is processed. So this streamlined structure, it's likely aimed at creating synergies and efficiencies within the group.
makes sense. Finally, always important, the auditor's opinion on the financials. Any issues there?
No issues reported. The audit firm, Nisman Co. LLP, issued an audit report with an unmodified opinion,
Unmodified meaning.
meaning a clean opinion. The auditors believe the financial statements give a fair and accurate view of the company's performance and position following the accounting standards.
Okay. So, to sort of wrap this all up, our deep dive into Aditya Birla Capital's recent disclosures really shows a company demonstrating, well, strong growth across its quite diverse financial services portfolio in FY25.
Yeah, and that growth seems underpinned by two key things. Their strategic push into digital technologies and a clear focus on managing risk effectively.
Right. And the successful merger, the
Yeah.
amalgamation, plus their comfortable capital position, it really seems to set the stage for continued expansion.
Precisely. And that leads us to a final thought, something for you to maybe mull over. As Aditya Birla Capital moves forward with this integrated structure and in this, well, rapidly changing digital world,
Yeah.
how will that health-first model we talked about and their increasingly sophisticated data strategies, how will those things further differentiate what they offer? And how will it impact customer engagement in this really competitive financial services market?
Interesting question. What new growth avenues might pop up?
Exactly. What new innovations might emerge from this more unified, digitally empowered organization? It's definitely a dynamic situation, one worth keeping a close eye on.